Hey folks, welcome back to my channel. Today I'm going to talk about an interesting dual investment product that is offered in Kucoin. I'm not sure how many people are aware of this investment product that is available in Kucoin, but I have started using it. And before I go into detail, just a quick legal disclaimer. This is not a financial advice channel and these are purely my personal views, and I'm not getting paid to promote any of these products or projects. I invest my own money, so I'm willing to risk it all. So if you are planning to invest in any of the projects or products I talk about, please do your own due diligence before investing any of your hard-earned money. And obviously, you want to consult a financial advisor before making any financial decision for yourself. So since we talked about the legal disclaimer, let's talk into more details about what this KuCoin dual investment product is. So basically, this KuCoin dual investment product is a type of non-guaranteed high yield structured financial product. So why is it called as non-guaranteed high yield structured financial product? I will show you in next few minutes after going over some of the other details with an example. However, this product can be used if you want to get some premium on existing position either in BTC or ETH, but this can be also applied by buying some crypto and to extend gains. So either you need to have an existing position in BTC or ETH and you can use this dual investment product, or it can be easily applied by just buying some new crypto in your KuCoin account. And the strategy, what it involves is buy a crypto or utilize an existing position in BTC ETH. Then here we try to commit to sell the product position. Either it's going to be BTC or ETH at a target price, okay, in certain amount of days. So this is like we have some ETH on my account and I'm committing to sell that crypto or that ETH position at a target price. It could be higher than the current price, or it could be lower than the current price too at certain instances. And it is important to look at in certain period of days. So this is a commitment, or it's a commitment contract where you're trying to where you're saying that okay, I will definitely sell my crypto at this target price in certain days, and generally this certain days is from 1 to 28 days is offered as of now in KuCoin. So for committing to sell your crypto at a target price in certain days, what we get is like we are getting a guaranteed APR gain on the crypto. It could be either ETH or it could be Bitcoin, but we are going to collect guaranteed APR gain on the crypto at the end of the period. Like it's going to be 1 to 28 days, and this may or may not be in dollars, but I can explain them with an example later on. So basically, you are getting certain APR. It would be in in USDT, or it could be in the form of your crypto itself, and I will explain you later on with an example. So this is similar to covered call equivalency, or I call it as covered call equivalency because uh, if you are doing covered calls in stock market, you should be aware of about the options where you can sell for against your existing position, and basically that we call it as a covered call. And this is same covered call equivalency what we have in crypto. It's more or less similar. However, I will show with an example also. So say for example, and at the time of making this video, the current ETH price is 1211 US dollars or USDT. And if you look at the current options available in KuCoin, these are the various target prices where I could commit myself to sell my ETH position in this many days, okay, based on the reference APR of this what you see. So it ranges from 113 to 28% what we see for different target prices and over different period of time. So let's focus on this mid band where we are talking look at some position from 7 days to 14 days. I generally don't like this 1.7 day option. I generally like to play within 7 to 14 days. So let's focus more. So what we are saying over here is like, even though my current ETH price is 1211, my target price, what I'm if I subscribe to this specific position, what I'm subscribing to is like, I'm willing to sell my ETH in 7.7 days, which is going to be this specific settlement date, okay, at a target price of 1250. And for making this commitment, I'm going to get an APR of 91.5%. So even though the APR looks 91.5, it's a much higher APR, but it is only applicable for 7.7 days. So don't get excited about this big number, because eventually it is dependent upon the number of days you are subscribing to. But the equivalent APR is 91.5%. However, if I say that if I'm going to willing to sell my ETH at a target price of $1,300 for after 14.7 days, then my reference APR is 50%. So depending upon the target price what you pick and the amount of, or how many days you want to hold that contract, okay, you are able to get a variable rate from 91.5% to 50% APR. And obviously you will be seeing that, for example, this 1250 contract for 14 days has actually higher reference APR compared to 1250 contract at 28.7 days, which is only having like 57% APR. But then you have to keep that in mind, that even though this is a lower APR, but it is for a higher number of days, so effectively you will be earning more in 28 days compared to 14.7 days with a higher APR. So those things are a bit tricky, and you will understand as you work more. So what happens at the settlement date? So today's current price was 1211 USD, and you are subscribing to one of the target prices at specific number of days. So what happened at the settlement date? So for example, if at the time of settlement date, for example, if I subscribe to this last option, okay, in in 14 or 15 days, if depending upon the price of the ETH, okay, if the ETH price is greater than 1300, it could be 1500, it could be 2000, it could be $1,000,000, the settlement will be in USDT. However, we have committed to sell for $1,300 only, irrespective of the price of ETH when it's greater than the target price. But say for example, if ETH price is less than target price, like say it's 1299 or 1250 in next 14.7 days, the settlement will be in the form of ETH. So basically there are options: either it will be settled in USDT if it's greater than, if the ETH price at the time of settlement is greater than target price, then the settlement is in USDT, or if it is less than target price, then the settlement is in ETH. And that is the reason why it's called as dual investment product, because either you will get paid in the USDT or it will be in ETH. However, one thing you have to keep in mind, that once subscribed, ETH is locked for that period. So if I am subscribing to this specific contract, then my ETH position is going to be locked for 14.7 days, and I cannot get out of that contract. So that is something you have to keep in mind. So how do they calculate the amount you get? So say for example, as I said, if the settlement price is less than target price, then the ETH is going to be used for the settlement, and at the time of settlement date, the settlement amount is going to be nothing but the subscribe amount or your initial ETH quantity, and this term will be used. So basically this is nothing but the APR what we saw, and that is been applied for the term what we subscribe for. For example, if we subscribe for 50% of APR for 14 days and my ETH is less than $1,300, then I will going to get this multiplying factor to this my subscribed amount. However, if the settlement price is greater than or equal to the target price, and in this case if we are looking at the target price of $1,300, then we are going to get USDT and not ETH, and that is going to be nothing but the same amount on the same percentage gain based on your APR, your original ETH quantity, and that has been multiplied by your target price. It could be $1,300, it could be $1,200, or whatever you are hoping for, and that is the amount you're going to get based on the target price. So basically, then whatever you get at the time of settlement, it is nothing but the APR gain what we got over here plus the price appreciation up to the target price. Because remember, my buying price was $11 based on the current ETH price, and my subscribed target price was $1,300. So basically, this is obviously going to be price appreciation, and then we are going to get this percentage improvement or percentage gain, APR gain, in the amount of ETH that has been used to have this settlement amount. So say for example, if we look at more detail, for example, in the amount of, if you do the math, for example, for some of the target prices we were looking for. So if you look at the current price of ETH, which is like 12.11, and assuming that we have one ETH is bought at this point, at this price at the time of making this video, and then these are the variable target prices we are looking at. So basically it goes from 1250 and 1300. So these are just an example, and this was the APR that was been offered. It ranges from 91% to 50%, and the duration goes from 7% to 28 days. So basically, if I am assuming at the time of the settlement date, if the ETH price is less than the target price, then the amount of ETH what we will receive will be these values at the settlement, after the days or at the time of settlement. So remember, we started with 1 ETH, but because of the APR, the amount of ETH we are going to receive at the time of settlement is going to be these values or these target prices and for this amount of duration. So basically the percentage gain what you're going to look in your ETH is going to be from 2%, 3%, 4.3% and 1.2% or around 2%. So basically I know in crypto people talk about 50% gain, 60% gain overnight, but this is for those investors who actually own ETH, and these are not like those gamblers, those who are used to seeing the gains of 50 or 60%, but those who are like prudent investors who are actually looking for some diversification. So I know these numbers could be look smaller percentage wise, but you have to keep in mind that these are the gains what you got in 7 days. This 5% gain or 4.3% gain in amount of ETH you own is over 1 month. So it's not a bad if you are not a gambler and you are trying to improve or increase your account value over a long period of time. But say for example, if the ETH price is greater than target price, okay, means like you bought at 1 to 11, 1 to 11, and at the time of settlement, the ETH price is greater than the target price, then this is the amount of USDT we will receive. And this is important, we have to keep in mind. Here, if the ETH price is less than target, we got ETH. Here, when the ETH price is greater than target, you are getting USDT, and this will be the percentage gain from your position of 1 ETH at 1 to 11, and this will range from 5% to 9.5% for various target prices. Somebody may wonder why there is this number and this number don't match, and that is because this is your gain in ETH, whereas and you settle in ETH, whereas this one you are settling in USDT. So basically you kind of sold your ETH at the time of settlement date, and this is the amount you are receiving for holding 1 ETH. And obviously, like since this target price was 1250, you are getting 1274 because there was gain in your ETH which was based on the formula what you saw previously. So technically this looks all good and fancy, but you have to keep in mind that ETH can go to zero also, because you never know in crypto space or any investment product, prices can go to infinity as well as to zero. So ETH can go zero or drop in value significantly, as well as ETH can go to infinity or it can appreciate also significantly. For example, I bought for $1,200 1 ETH, and in next 7 days ETH went to $2,000. However, the target price what we committed is over here. So whether the ETH is at 2000, I'm only going to get 1325 because that is what my target price was, and that was the reason why they were willing to pay you an APR for subscribing to that contract. So you want to be careful. It's not everything is not easy as such, I would say, but then this would be still would be a good product, if you ask me. So this is nothing but it has the same covered call equivalency. Even the same thing happens in covered call. You sell your options to get a premium, and then the stock can go to infinity or it can drop in value substantially. So similar risk, similar gain. And because the way it has this kind of risk of dropping your value because of dropping your uh, position of the crypto or the amount of value on ETH itself, as well as there could be significant gain in your ETH value itself. However, we are subscribing to 1300 contract, we are missing those gains. That is the reason why this product is called as non-guaranteed high yield structured financial product. So who can actually benefit from this strategy? So basically, someone who is a long-term holder who believes in that underlying crypto, it's either ETH or BTC, then someone who's also doing technical analysis, for whom the hold period is actually longer than the settlement date. For example, based on my technical analysis, if ETH is going to be, say, $1,300 after 2 months, based on my technical analysis, then actually I could technically do a 28-day period and lock in my ETH, hoping that it will not go to 1300 in the during the settlement period, and I will get some gain out of my current ETH position. This could be also applicable for someone who's trying to do a dollar cost averaging during fall events, as in if the price is dropping, you know that, and you're still going to do a dollar cost averaging, then why not do a dollar cost averaging and then just use that amount which you have bought recently and even sell out a contract for that price, for a target price which is much higher than your buying price. And obviously you want to make sure that whatever amount you're buying during dollar cost averaging, that is the amount you're going to risk at that time, as well as, and you can use this strategy as a general trading strategy or as a mean of diversification. I know in KuCoin there are a lot of options like spot trading, bot trading, then even futures options. So this could be another strategy what you can apply. So with that, actually, I will just go over briefly over how it looks like in KuCoin. So basically, again, if you go to KuCoin, they do have option for this KuCoin Dual investment, which is where right now they show have option for BTC and ETH, and they have like from various from ranging from 1250 to $1,400 with the various days of settlement days. And then you can actually look at BTC, you can look at ETH, so there are a lot of options available. And then if I look at my own personal position, so as of now I have like 4 positions in this dual investment, with one being in BTC, and then there are 3 positions I have in ETH, which are from 7.7 days, 14 days, and for 28 days. And then I have this BTC position for 7 days. So, which has an estimated APR, BTC has an APR of 46%, and then the investment product I have done for ETH back then was like 36%. Then one is in 33% and one is in 52% APR. So right now with some of the ETH and BTC position I have, I keep on rolling this away like 14 days, 15 days, 14 days to 28 days, and getting some decent APR out of it. Anyway, I'm holding this ETH position, so why not just extend the game? With this, I would like to conclude my video, and then if you like this video, please subscribe to my channel, as well as hit the like button, and then if you have any question, just ask in the question in the comment section, and I will try to answer as many questions as I can. And if you need any help, just shoot me a comment, and I will be more than happy to help you out. And please don't forget to hit the bell icon for my other videos coming in the same space. Thank you.